Hi, I'm Mitzi Sullivan with Facts, Figures, and Fallacies from the Front Line. I have the latest updates on Trump's tax plan. Here's what you need to know.
Let's look at the key proposals and changes. The first one is the extension of the Tax Cuts and Jobs Act, and many of those provisions are set to expire at the end of 2025. The Trump administration is pushing to extend these measures, including the flat corporate tax rate of 21%, increased standard deductions, and an increase in the child tax credits. Another very interesting thing that President Trump has been talking about is the elimination of the income tax. So, do we think that President Trump will completely eliminate the income tax? No, we do not. However, there is an interesting proposal where the first $150,000 worth of income would be completely excluded. So I don't know what that would look like, if that's a personal exemption or married filing joint exemption of $150,000. So that's something that we will be watching, but no, we don't think the income tax is going to go away. The second thing is the repeal of the SALT cap. So that's the state and local tax that primarily affected people in high property tax states like New York or California. However, with the increases in property tax values, most states have been affected, and I know that we have been here in Texas. So the Trump administration supports repealing the SALT cap, which had previously been $10,000. That would go away. So if you itemize your deductions, there would be no limit on how much you could deduct for state and local taxes. Fourth would be new tax credits, and those would be tax credits for family caregivers and car purchases. The family caregiver tax credit would probably be like the child tax credit, and the interest deduction for interest on automobile loans would be similar to the mortgage interest deduction. The auto loan interest deduction would only apply to vehicles made in the United States, and it would allow car owners to reduce their taxable income by the amount of interest that they pay on their automobile loans each year, very similar to the mortgage interest deduction. That would go on as an itemized deduction on Schedule A. The fifth item that is a part of Trump's tax plan would be the corporate tax rate reduction. So he wants to reduce that corporate tax rate to 15%, and that would make us very competitive worldwide. We would have one of the lowest corporate tax rates in the world. And probably most controversial is the reciprocal tariffs. So Trump did this in his first term. The opinions on the effects of that were pretty mixed. I don't think we saw large increases in inflation, but we did generate a significant amount of additional tax revenue. So let's look at the key provisions of the Tax Cuts and Jobs Act. The first provision, it would be lower individual income tax rates. So if you remember, in 2017, the rate went from 39.6 to 37. That decrease in individual rates is set to expire in 2026. If the Tax Cuts and Jobs Act is renewed, we will continue to have that 37% rate going forward. We would not have to revert back to the 39.6%. That's the first key. The second one is an increase in the standard deduction. The Tax Cuts and Jobs Act doubled that standard deduction, if you remember, from $15,000 to $30,000 for married couples filing joint. So if we renew the Tax Cuts and Jobs Act, we renew that standard deduction. Everybody gets a higher deduction in 2025 and moving forward. The third provision is the child tax credit. If you remember, that was at $1,000. It was increased to $2,000. It reverts back to $1,000 in 2026. It does have a phase out for married couples that file joint returns of $400,000. The fourth provision is the qualified business income deduction. So that was that 20% on pass-through income. That is set to expire. So we are really hoping that gets renewed. The sixth provision is the estate and gift tax exemption. If you remember, under the Tax Cuts and Jobs Act in 2017, that nearly doubled. So that would revert back unless the TCJA is renewed. And then the seventh provision is the limitation on itemized deductions. So we already talked about the SALT deduction. The cap of $10,000 would go away. There are limits on the mortgage interest deduction. There are limits on the miscellaneous deductions, and the Trump plan would be to either eliminate or increase those limits. So now let's look at some of the incentives that the Trump tax plan provides for businesses. So the first one would be the qualified business income deduction. We already talked about that. That's the 20% of the net income on your pass-through businesses, 20% reduction in your income from those businesses. Bonus depreciation, everybody was a great fan. Businesses really loved the bonus depreciation where you could take 100% in the year of purchase, whether it was new or used. It could take you into a loss on your business. That was a very popular deduction. The Trump tax plan is looking at bringing that back. A very interesting proposal in part of Trump's tax plan is the reduction in payroll taxes. That would be wildly popular. I don't know how it's possible to pay for that, but we'll keep an eye on that one as well. And then finally, for businesses, the research and development tax credits, those are credits that you get for investing in innovation or technology. Under the new plan, it looks like those credits would be expanded. So we'll keep an eye on those as well and see if that passes. So this plan is currently in the budget reconciliation process. So that's where the Republicans are trying to be able to enact this plan without having to rely on the Democrats. We'll see how effective that is. Thank you so much for watching. And if you found this video helpful, don't forget to join our Tax Talk and Wise Tips Facebook group. It's a great place to stay updated, ask your questions, and share your own insights. We'll see you next time.